Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, let's start with Eli Lilly, the drug maker, down about 1%, so modestly underperforming the S&P 500, though not one of the worst performers. This comes after news that the company halted a study of an experimental drug that would be done in combination with one of its weight loss drugs to help prevent obese patients from losing too much muscle. This has been a long debate for these companies. Eli Lilly, Novo Nordisk leading the charge there with patients who are going on Zepbound, Mounjaro, or Ozempic and are actually eating less and consuming less, but therefore losing not only fat, but muscle and other weight. So this coming a bit surprising, according to some analysts, that the company would halt its trial, though its spokesperson pointed to the fact that they reevaluate these drugs trials on a regular basis. So ticker LLY down again about 1% right now in the morning session. Not a sharp move lower, though, really only trading at the lowest level in a few weeks.
I'm also looking at the auto sector doing pretty badly this morning. And of course, if within the S&P 500, you're really talking about Ford, Tesla, and General Motors. But you've got a car or auto adjacent company that's given some disappointing results.
Yeah, worst performer in the S&P 500 this morning by a large margin is CarMax, ticker KMX. Scarlett, this coming after earnings that significantly missed analyst estimates. Truist describing it as, quote, miss across the board with nothing good to see here. Ooh, which is brutal from the sell side. You're supposed to be playing, incurring favor to the companies. Unless you're hold rated, though. Scott Ciccarelli maybe reevaluate that price target of $74 because the stock is below 44. Trading, Scarlett and Paul, at the lowest level since the pandemic, March 2020. So CarMax under pressure. We're keeping an eye on AutoNation, Carvana, pretty much anything in the ecosystem again, after not only did total used units come in well below estimates, analysts really saying that those weaker trends have continued so far into this current quarter. So it does seem pretty dire out there.
You know, speaking of things being dire, Robert Bosch over in Germany cutting about 13,000 additional jobs at its auto parts business because you've got a sluggish European car market as well. So not good across the world.
But hey, the markets are trading near all-time highs, so it's all totally fine. Just ignore the consumer. And want to wrap up with Jabil, ticker JBL, the second worst performer, only down 7% to CarMax's 24%, though that is the worst drop for that company since the summer. Jabil is a company in the supply chain ecosystem within tech, so some of their big clients are Amazon, Apple, Tesla, you name it. So they reported results that mostly missed analyst expectations. We had Vital Knowledge calling out pressure on margins in their AI segment. So certainly something to keep an eye on. But broadly speaking, when you look at their forecast for first quarter net revenue better than expected, as was core EPS. So this could be just one of those moves for a company that's moved pretty sharp to the upside in the last little bit. Right now, trading around $209 a share. A year ago was closer to $113. So giving back some of those gains, but still pretty ugly performance on a one-day kind of basis for Jabil. Again, ticker JBL.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.